Good evening, everyone. For those watching along, all very welcome to our weekly webinar for Tuesday, the 19th of August. Of course, we've had a lot of volatility over the markets, within the markets over the last week. And of course, we've had more volatility over the weekend with Trump meeting Putin in Alaska. And of course, we've had economic data prints today, and market conditions are nicely poised. So, I suppose without further ado, getting into tonight's call, of course, you'll see all the tabs on the top of your screen. We will obviously be going through each of the different asset classes through tonight's call. Obviously focusing primarily on the equity markets, the indices, and of course sifting back into the other assets as well. And of course tonight we will finish off with a little bit of a segment on the crypto side of things, because of course that is taking up a lot of market volatility at the moment in time. So I suppose without further ado, kind of getting into the calendar and looking at kind of the pre-market movements this week. Of course, a lot of volatility presented. If we were to look at the one-day performance, of course, we've seen the cryptos getting hit individually today, along with the equity markets. But of course, we'll take a little bit of a deeper dive tonight as we kind of look at the charts, and of course, as we look at the price action visibly beyond that, particularly both futures and of course on the CFD side when it comes to crypto. But I suppose if we kind of migrate back to the economic calendar firstly, tonight, of course, today we've got the latest Bank of Canada Consumer Price Index figures, so basically inflation figures. The core perspective came in obviously at 0.1% month on month as opposed to 0.4%, so that's coming in lower than expected. And of course, on the headline, year on year, 2.6%, with obviously the headline month on month, core at 2.6%, with the headline at 1.7 and 0.3%. So overall, if you were to look at the inflation dynamic in Canada, you'd actually say that those inflation figures are kind of matching expectations by the BOC, and of course has them nicely poised in terms of where their interest rates are currently set at present. Now today, of course, we did have the building permits at 1:30. We did have the housing starts at 1:30 also, but it was really about 3 o'clock today where we actually started to see that initial progression. Now we will look at the S&P and the Nasdaq in tonight's call, looking at kind of the symmetry between the two, because there was a few clues that these markets maybe weren't entirely comfortable today. We saw the Nasdaq initially sell off at 1:30 into 2 o'clock, but it was really kind of into 3 o'clock when the S&Ps and the Dow Jones, etc., actually started to follow suit. So we'll obviously be going through that again in a little bit more detail later in tonight's call. And of course, as we move to tomorrow, Wednesday, we've got quite a busy day in the calendar from tomorrow. We've of course got the RBNZ and the PBOC interest rate decisions overnight. RBNZ, kind of like what we're seeing in Europe with the Bank of Canada, or with the Bank of England, the ECB, Bank of Canada more recently, and of course the RBA in Australia, whereby they're looking for, again, another cyclical 25 basis point decrease. And of course, if you were to zoom in on that, you could kind of get to see the kind of outlook of the interest rate cycle within the RBNZ. And you can do this across the board with a lot of the major central banks. At a peak when the inflation narrative was really picked up into the end of 2023, beginning of 2024, where we saw those rates starting to cut last summer, we have seen the RBNZ go from 5.5% down to 3.25%, with the expectation to cut a further 25 basis points tomorrow. So that basically means within the last year or so, the RBNZ, should I say, has cut rates by approximately 2.5%. So if you were to equivalent that in 25 basis point increases, that's effectively 10 over the last kind of 12 months, which kind of regurgitates that idea of these regular, often cuts of 25 basis points being visualized within the RBNZ. And of course, that was the theme we've kind of seen in the Bank of Canada. As I said, we've seen it in the RBA, and of course we've seen it in Europe as well. So these little kind of metrics are a good idea to see from a fundamental perspective, tying everything back in terms of those macro plays as well. All right. Now, interestingly enough, as I said, the PBOC, on the other hand, isn't looking to cut rates, expected to leave those at 3%. And that, of course, is the running dial that we've kind of seen more recently over the last kind of 3-4 months or so from the PBOC in China. Now, moving back into Europe tomorrow, we do have German data at 7 o'clock. We do have UK CPI prints. And I think that's going to be important as well, because, of course, We've seen kind of the inflection point in the cable GBP USD over the last week or so. We've seen those DXY numbers bottom out around that 97.5 into 98 threshold, but we're also seeing the elevated short-term but also medium-term spikes in the FTSE. So of course tomorrow's prints lows and has propped higher into the early parts of trading this week. So that for me is going to be an interesting dynamic tomorrow. If you trade pound, well, that for me is really, really important. Of course, as you look at both the retail price and obviously core and headline inflation prints in the UK, anything lower than expectations is going to obviously be a good thing. But obviously anything higher than expectations, if we were to see a little bit of resilience in the CPI numbers, that would obviously put the equity risk side of the equation in the UK markets obviously under a little bit of threat tomorrow. So that's obviously something worthy to note. So when you look at it on face value, obviously retail price index coming in around about 4.5%. The core CPI year on year coming in at around about 3.7, as too is the headline. So there's very little of an inflection point between the headline and core. And that'll be an interesting team to look at, particularly as we move into the autumn as well. So tomorrow European session is going to be pretty interesting. And then, of course, we follow it up with European Harmonized Consumer Price Index data coming out at 10 a.m. Expectations to be around 2.3. So again, similar narrative. If we see obviously 2.5 or 2.6 as a realized data print, well, of course, that's going to put the German DAX, that's going to put under some of these risk assets in Europe under a little bit of pressure. And of course, we've actually seen today into tonight's close, this evening's close, we've obviously seen that inflection point in the DAX. We came up to the weekly highs and we've kind of dropped back down. So there's a little bit of steadiness to the downside coming through there in the German DAX, and you'd actually expect that to be reinforced tomorrow if it's a case that these numbers were to become a little bit sticky or difficult for risk sentiment. Now, other than that, tomorrow we do have FOMC minutes at 7 p.m. And that's going to really kind of poise us into obviously the better part of trading tomorrow as we move into the US session and into tomorrow night's close. Now, bear in mind, a lot of our earnings seasons is pretty much done. All of the major stocks composition weighting is done, except for Nvidia, which is due to be reporting in the next week or so. And then, of course, Thursday, back into those PMIs. We talked about the PMIs more recently. We've got a raft of data prints on Thursday, right through European Open at 8 a.m. London time, local time. And then, of course, into US Session Open at 2:30, where we have got data prints at 1:30. And then, of course, we've got the S&P PMI data coming out at 2:45. And obviously the existing home sales at 3 o'clock. So Thursday is going to be the busiest day of the week for me, just because of the relentlessness of the data that's going to be visible through the course of both Europe in the morning and of course in the afternoon with the US session. Now, broadly speaking, when it comes to PSMs, when it comes to ISM data, and a lot of these kind of composite manufacturing and servicing output prints, of course the narrative is 50, right? Anything above 50 is growth, is expansionary. Anything below 50 on the expectation, forecast, or realized figure is obviously recessionary. So above or below is kind of your kind of metric. Now, looking at the forward-looking indicators, looking at the macro style really into the back end of the year, we're actually expecting, personally speaking, a lot of these PMI data to actually start moving higher into the autumn. So we've seen it kind of more recently over the last 6 months or so. A lot of these prints were kind of 48s, 49s. We've moved up into the 51s and some, and even some, like for example, the services PMI in the US, for example, its recent figure was at 55.7. So a lot of those data prints over the course of the year moving in the right direction as time accrues and as time goes by. But we obviously want to be making sure on a month-to-month and quarter-to-quarter into year-to-year cycle that they actually continue to show consistent improvement. And again, by deep diving into any of these prints individually, you'd have a fairly good running idea in terms of local trends. So for example, if I want to pick together the services PMI sector, you can obviously look at kind of recent reports, etc., and of course recent data prints. It's widely available in a lot of these calendars as well. Okay, and that's really kind of going to be of significance as we move into, as I said, Thursday. A lot of data prints, and we're looking to see are we going to continue to kind of have this running team of PMIs outperforming into the back end of the year. And that is, of course, before we see any sort of QE, and of course before we see any sort of Fed-induced cuts coming through as well, and that's going to be a particularly interesting narrative in the US. Now, as I said before, we kind of finish off on Thursday, European prints. The only ones that kind of would be a little bit kind of concerned about is global manufacturing PMI in the UK. That has been quite poor. We know from a services perspective, the UK has been doing okay, but the manufacturing side of things has been quite poor, and that has been a running theme as the economy becomes more service-led rather than manufacturing-led. So that's obviously an interesting dynamic. You could also say nearly the same kind of style in Europe as well. Both Germany, with the manufacturing PMIs, they're kind of steadily beneath the services side, and of course as the European broader zone also replicating kind of similar prints. So we're kind of starting to see similar themes in Europe as we move into the latter part of Q3 into Q4. And then of course, to round out the week, we've got German GDP on Friday. That's going to be an interesting narrative. We've seen some of them prints the last couple of weeks or so. German data has been pretty solid, but if you were to look at it on the year-to-year basis, a lot of the German data has been quite poor. So the German GDP numbers on Friday again will be particularly interesting if you trade the likes of euro dollar, if you're actively trading the European Open, or if you're trading European-based equities. So like for example, Euro stocks, the German DAX, GER 30 or GER 40, depending on the broker you are trading on. So there's quite a lot to kind of digest this week. For me, as I said, the two busy days is Wednesday and Thursday, a little bit of a dial back on Friday, and then really looking to ascertain sentiment into the weekend. So I suppose looking at sentiment first before we kind of migrate into the equity side of things, the indices and these broader risk orientated assets, the first port of call for me this week is really the dollar. So last week we kind of talked about this idea of the dollar getting into that 97.50 inflection point. That for me was kind of a critical viewpoint, because of course we've really seen the dollar implode over the last kind of 6-7 months, really since Trump took office in the final few weeks of January, and since then that dollar has really imploded. So we've gone from kind of 110s down into those mid 97s, 96s. I think we actually touched almost about 96 and a half, but we've started to see the dollar start to become a little bit more balanced after a period of significant selling. Now again, for those watching on the sidelines, you can kind of see that inflection point. This was the dollar trend for so long before we had the inflection point, this apex breaking down and really starting to implode. And that was obviously the running theme for the first 6 months of this year. Now, as we kind of move into kind of more lateral movements into where we stand, it's now a case of, are we actually going to see a little bit of a recovery? Are we going to see a little bit of a pullback in the dollar above this 99 print, back into those low 100s? So kind of 100.5, 101 becomes logical scenarios. And for me, this is really something that I'm looking out for this week to see if it actually happens, because when you start to dial out of the broader trend into those lower time frames, really particularly over the last probably about the last month or so, from about the middle of July, we're really kind of getting this kind of formation of price structure trying to elevate that dollar back into those levels of which we've talked about a moment ago. And you're kind of seeing that as well, because of course we had that excellent breakaway at the end of July, only to implode really into the first 2 weeks of August when those indices made new all-time highs. So this is where obviously we've seen the S&Ps go to almost 6,500. We saw the NASDAQ break to new all-time highs. And of course we saw that Dow, even though it was the laggard of the three, it too also made new all-time highs. And since then, obviously, with that happening, with that dollar kind of cementing bottoms, at least over the last week or so, if you were to evaluate price action last week into this week, you'd actually say that 97.5, really more into that 97.775 area, has really held bottoms. And that was the crossover point in sentiment where we had this breakout at the end of July, because of course we had that apex up, price action came back down, and of course it migrated back down to where that initial buying took place towards the end of July. And since then, it's really just a case of, again, looking at price action structure over the last week. A lot of consolidation, a lot of wagered back and forth price structure, but it certainly seems like bottoms, at least in the short term, are in the dollar to create a move higher. And for me, as I said, that'll be the kind of interesting theme over the next, as I said, week or so, particularly into the better part of this week. We have a lot of data prints this week. Interesting to see if some of these start to miss, then that's going to be a cause to kind of pivot a little bit of the risk side of the equation, of which then you can really start to see this dollar move higher. Short term, above that 98.3 to 98.4 handle, which for me is really only taking the highs that was noted yesterday. and more prevalently the highs noted from Friday. If we start to see that breakup, then it can start to correct this sell-off that we've seen from the early parts, and obviously the early parts of last week as well, but the early parts of August as a whole. And that for me is above 99, which was that correction point of this apex, but equivalently beyond that, pushing on through 99s onto that other level up above into those 101s or approximate regions. So that is really what I'm going to be looking at this week to see if that dollar actually does pick up strength from a daily perspective down into those lower perspectives. Looking at that broader macro trend into those lower trends wouldn't really be too surprising if we saw another new short-term high being created on the dollar. Now, when you also bring in the VIX side of things, right, this is where things get incredibly more interesting, because of course we've seen the volatility side of the curve completely fold really into Q2, into the early parts of Q3, where we saw that kind of continuous lower highs. We saw it in May, we saw it in June, we saw it in beginning of August when we had that again inflection point in the dollar for the VIX to run lower. But every time the VIX index has come into this 14-15 threshold level, we have seen significant bounces. Now, I'm not talking significant where we had that aggressive move into 60s and 65s both in 2024 last summer and of course in April of this year. But even those shorter bounds, that 21, 22, 23, we've seen many examples over the last 6 months where that VIX has gone from kind of 14, 15 range up into those low 20s. And for me, that is something that I'm going to look again, as I said, particularly with the DXY starting to form bottoms. Certainly looks like we're starting to see a similar theme on the VIX as well at those critical levels. So of course, if that VIX side of the equation starts to continue picking up volatility, where we see maybe data prints maybe disappoint, and maybe macro side of things, sentiment, narratives in the media also coming through, that will help to springboard the idea of this VIX moving higher. And of course, if you were to look at it from even just the cyclical nuances over the last 2 or 3 weeks or so, we've got a very, very clear unfilled gap on the VIX at that 20 to 20.5 area. So of course, if we were to see a spike in the VIX, you're really looking at this breaking out beyond this level and really kind of moving back up into these bounds where we've seen a trade in June of this year into the latter part of June, and of course into the end of July, where we had that peak high at the beginning of August. And we talk about this crossover in sentiment. What goes up must come back down eventually. And it's the cyclical rotation of that as well. What goes down will also rise in time as well. All right, so keep an eye on that one over the next couple of days. We will, of course, be on hand to kind of evaluate risk and sentiment over the next kind of 2 or 3 trading days as we move into the latter end of this week. But for me, the VIX side of things is really, really important because that underpins the flight to safety. And of course, when we see flight to safety, we see weakening risk-orientated assets. And of course, we also see the likes of the equity markets, indices, and other assets like crypto, for example, also moving on the back foot. And of course, that brings into the consideration these equity markets, because of course, last week, I think the prime example for me was the Nasdaq. We had that massive move last Tuesday, last Wednesday. This was the kind of the ethos of the move that I had visualized on Thursday when we broke down. We got that initial breakdown. Live on our call, we kind of said, well, look, let's see how it reacts at this value area here, and actually see if there's a kind of a segmented sell-off last Thursday. Now, as we saw it, it kind of hung around for most of Thursday's trading session around that value area. So it was only really into the close when we actually started to see it move a little bit lower. And then, of course, Friday, we had that secondary reaction from the value area, which was the prior day's value area, Thursday and Wednesday, and we moved ultimately lower back to retest the prior all-time highs. So this was the all-time high that was created at the end of July. Of course, we had that sharp correction at the end of July, beginning of August. And then, of course, over the last few weeks, we've kind of seen that rotation into risk orientation, S&Ps, NAS, etc., getting to new all-time highs. And then, of course, over the last 3-4 days in particular, as we've seen that dollar starting to strengthen, as we've seen the VIX start to move higher on the index, both pushing up or solidifying bottoms, at least in the short term, it's seen that equity side of the play completely broke down. So this, of course, led to that breakthrough of the prior all-time highs around that 23,700, 750, depending on the broker you're using, and an almost immediate sell-off back into last Tuesday and last Monday's value area, which was down here around the 23,550s, 23,600s. And then from there, it's been a fairly gargantuan sell-off through the course of today's session. We've gone from 23.7s down to about 23.4s, so we're about 350 points off for this session today, which is around about 1.5%. So again, it's that crossover in sentiment as the volatility curve picks up, formulates lows and picks up. As the DXY formulates lows and picks up, you can really see the heightened sell-off in some of these equity markets. And of course, we're not immune to the fact that it is still summer volume, it is still summer trading. Therefore, to move the dial, to move the needle in some of these assets, it doesn't take as much as it would in, let's say, other times of the year, particularly as we move back into September. So of course today, on those data prints as well at 1:30, we actually, and this is kind of what I was alluding to in the beginning part, we had a little bit of a move, and then we had that segmented sell-off on the open, and from there it didn't look back. On the S&P, on the other hand, it was a little bit of a delayed reaction, because of course it kind of hung about. There was a little bit of a move, but it was only into the 3 o'clock, 3:30 print where we actually started to see the S&Ps go. So if you were trading NAS and you were seeing this move lower, well, then the arbitrage was actually trying to sell the S&Ps, because the S&Ps at the same time hadn't accrued the downside break, and actually from there it was quite an easy play. So we've actually gone from that 64.50 handle at 3 o'clock down to what, 64.08. There was almost a 400 point move, or a 400 pip move, or 42, 43 point move on the index. Again, almost what, 2/3%, to 3/4%, off of a very, very clear arbitrage move, while at the same time the Nasdaq by 3 o'clock had already broken through the lows. Now Nasdaq coincidentally continued to move lower, so of course all of these risk orientated assets has continued to move higher into the close, as I said, as that DXY has moved into those daily highs, weekly highs as such this week, and as I said, as the VIX has moved higher as well. So these data prints tomorrow I think are going to be interesting, but incidentally I think Thursday's data prints is really going to be the narrative to see whether this VIX, this DXY moves higher again off of these lows that's been kind of noted for this equity market to create even further downside. And I suppose that's really kind of the big point for me, as the equity markets over the last week had made new all-time highs. I was wondering, would we actually see 6,500 before we saw a correction? And incidentally we didn't. And a lot of now on futures we probably just about did, but on the CFD side, it obviously failed underneath that. And again, that's relative to the order book and the centralized trading data flows, of which we would encourage people to probably focus primarily on. Nasdaq on the same side, as I said, complete unwind today, but when you look at it over the last kind of week or two, we're not even back to those August lows. And of course those August lows is still another 500 points lower compared to where the Nasdaq is currently trading at, which is again around about 2.5%. So this only kind of illustrates how progressive these equity markets has been over the last, as I said, 2 weeks or so, because from peak to trough the Nasdaq was up almost 6% from those August month lows. And again, not quite the same type of story on the S&Ps, but quite similar in a lot of ways. All right, so that's why it's also important to look at that side of things as well. So we talk about what goes up must come back down eventually. From there, as I said, it's really a case of watching that vol or implied vol over the course of the week, because as I said, if that VIX continues to progress higher into those high teens, well then there's really no reason why we shouldn't see further downside in these equity markets. And of course, looking at the broader perspective, there was a lot of volume here around that 23,200 level towards the end of July, start of August. We had that inflection point, we broke back down, and then of course beginning of August we got back above it. So for me, you've kind of got higher highs, higher lows on the higher time frame trend, but when you dial in to a volume based perspective, that is something that's going to be very, very interesting over the next few days. And of course, if that really kind of envelopes lower through this highlighted yellow area, who's to say that we can't have even more downside and potentially retest those August month lows, which is basically a full apex up and a full apex back down. Almost a replication of what we had here. Consolidation, we broke aggressively up, we've came back all the way back down, only to move higher again. So broader time frames, shorter time frames, looking at the cycles, looking at the narratives, and more importantly, looking at volume integrated into the risk profiles within these trading systems. And that for me is very, very important at this moment in time. All right, so quite an interesting narrative. I think the S&Ps does continue to move lower, I think, over the next day or two. Particularly, as I said, if those sessions, if those data prints turned lower into those sessions, like you've got that area here around the 6400s, very, very interesting narrative to look out for. And while simultaneously we've also had the Dow. The Dow broadly was stuck above this broken line until it created that V-shaped bottom towards the end of July, start of August. And then at the same time, it's coincidentally also broken above the all-time highs. So it's basically creating higher highs but lower lows simultaneously. And this just illustrates the kind of volatility in this index at this moment in time. You can kind of see that for yourself when you look at it. It's kind of looking like a crocodile's mouth or something to that equivalent. So we could very easily see this Dow falter lower. If it does falter through that kind of 44,750, 800 handle, you could actually potentially see a full unwind back into those 44.2s, because of course we've had this aggressive breakaway, strong movement, new all-time highs, and of course if we were to clear this plateau or short-term plateau of volume and move below this cliff, then you'd really probably expect it to clean out this volume, which at times has been quite thin on the Dow Jones. So keep an eye on that one. Really anything sub, as I said, that 44,750, 44,800s maybe would be that kind of grind lower, and I'll kind of highlight that in yellow. And that's obviously something that we can look out for as we progress through the course of the week. And even as well, when you look at it on the upside, even just isolating price over the last week or so, this for example is last Tuesday, a little bit of a volume cliff here. Of course, thin volume into close, where obviously point of control was shifted up through the course of the session. And then of course we have thin volume again up into this area here, which is noted in yellow. And as I said, that's what we're looking for, to see if this area in yellow breaks. Now we formulated lows today twice. You've got this A again, wick down on the data just prior to the data print, extension higher, only to correct and move back to value area. So you tend to see a lot of that shift to shift pattern on a short-term trading basis as well through the course of the session. So for me, as I said, final conclusion there on that one is, if we break below this yellow area, I would be expecting fill this area, test this area here, and then of course with a subsequent break even lower if selling was poised in that direction. Okay, so keep an eye on that one. In terms of then, as I said, the Nasdaq, it certainly seems to be that way as well. A lot of volume in this yellow area. Now I'm going to probably just pivot it up slightly into that 23.2 to 23.3 handle. We're almost there. I would expect it to probably get down to that tomorrow. And I think that'll be the interesting narrative over the next few days with Thursday's data, tomorrow's data prints. Do we actually break through it? And as I said, that'll be dependent on what happens with the VIX. Now, VIX short term today, you'll notice last week, Wednesday, we gapped higher. We came back down. We didn't quite fill the whole lot on the gap. So that's quite an interesting play there, around that 14.6, 14.7 on the VIX. And then, of course, Friday, we gapped higher again on the VIX, created new highs, pull back down, fill that gap. And then, of course, today as well, no real kind of major movement in the VIX today. Of course, we have seen the VIX extend higher into tonight's close and trading underneath that 16 session. So that'll be interesting to see where, again, it can fill this. But also as well, you pivot a little bit left. You've got an unfilled gap from Friday the 8th. And then you have this fairly significant gap from Friday the 1st into Monday the 4th. So there is upside gaps to fill on the VIX. And we tend to see these VIX gaps fill kind of constantly all the time, because of course it's not a 24-hour, 7-day-a-week reporting index. So of course these gaps do appear on most days as well. So it's worth keeping an eye on that one from a short-term to medium-term perspective. Now, looking at the FX side of things, we've obviously focused quite a lot on the equity story. The the FX side of things for me has been really interesting because, of course, we talked about this 117.50 handle, and for price action on the euro dollar to break above 117.50, we basically needed that DXY to invalidate and just basically break through this low. And of course we haven't. We've basically held this as a structured low, and of course that's allowed that euro dollar to really stop in its tracks around that 117 handle. And we talked about it last Thursday on our Zooms when we were up around that 117.30 handle, and I said that 117.50 into 117.60 was going to be structurally important because that was the breakout, that was the progression beyond the existing short-term linear moves that we're identifying, and of course it hadn't happened. Now from there we've basically seen, obviously on the cyclical lows into those highs of the yellow box, you've got the first wave into a period of consolidation, you have the second wave into a period of labored consolidation, and then you've got that third wave into those peak formation highs, and that of course was the high. And then from there we've basically markets moving back into prior range consolidation, lower high forming because of course we didn't break through trend, we didn't continue progressing lower on the DXY, which meant that this euro high around that 117.30 was formulated. And since then euro dollar over the last couple of days has been kind of more pivoted to the downside following that reaction on Friday from 117s. Now you're only off about 15 points from the 117 print, but for me it's going to be interesting to see whether we actually continue to progress higher. And as I said, if this DXY does get above that 98.40s, you're really looking again at another break back into 99 short term. And of course, if you were to look at price action around the 6th, 7th, 8th of August on the euro dollar, at that same time, the euro dollar was down here around the 115, sub 116 handle. And for me, as I said, that's probably where price would go on a break of 98.40. So break above 98.40 sees this euro dollar really expel lower. Incrementally, you'd expect it to take out this short-term bottom from last Thursday. You'd expect at the very least a retest of this, but the probability is, if you look a little bit left, you've actually got this a lot of volume here from that, as I said, 1st, 2nd, 4th and 5th, 6th of August. So that's kind of probably where you're looking at, which is sub 116s into that 115.50 handle. And then really from there, it's a case of, well, if that DXY was to strengthen with a spike in the volatility, there's no reason why you can't look at that existing structure of price dynamics. Obviously seeing that DXY incrementally push higher would be the narrative then for that euro dollar to continue selling off, which moves then back into those teens, 114s, 115s narrative. So let's see what happens. Even if you were to look at that on a 4 hour perspective as well, excluding this kind of structured move here and just focusing on this here, it certainly looks like tops are in as well, and that would be break of neck. So interesting to see what happens. 98.40 I think is probably your benchmark there. And also simultaneously on cable came all the way back up into that V-shaped prior top. So this was the V-shaped top, 136. Now if you trade retail patterns, you'd say, well, that's a very, very clear inverted head and shoulders, because you've got left shoulder, you've got your head, markets are moving progressively lower to the right shoulder, so you have technical structure there for those who trade those technical patterns. But even for me, when you look at the volume based intuitiveness of these markets, there was a lot of volume around that 134, 134.50, and it's actually acted as the kind of the inflection point or a neckline of structure, because of course you had prior head, left shoulder, head, right shoulder, and then of course we flicked to the other way. So basically what that's saying in a nutshell, regardless whether you're looking at the technical patterns or whether you're actually looking at the volume, there's been a lot of interest around this, as I said, 134-ish handle, and you can already see, because of course those equal tops have been confirmed, while simultaneously looking for that move back down. And as I said, those data prints in Europe, in the pound, in the UK over the next 24-48 hours are going to be very interesting, because as I said, if they disappoint in terms of negativity for risk, you'd obviously see the FTSE struggle, but also if they outperform simultaneously, you could actually still see the pound actually move lower, while simultaneously actually seeing this FTSE hold a fairly strong trend that we're seeing at the minute. So FTSE very range bound, it's broke up, it's got back, it's held at 91.25s, and it's broken up again beyond the prior consolidation. And you can even see tonight it's rejected off of it. So it's broken up and it's come back down and rejected. So for me, that's going to be an interesting look tomorrow to see whether it holds above that kind of 91, 70, 75 and really gets above today's value area. And as I said, if that gets above 91.80s, you'd actually expect that to continue breaking on, retest those highs, and the probability is at the same time this cable continues this 2-3 day snapback of what goes up, rejects, crossover in sentiment, breaks down, inside bar rejection from last Thursday's value area. We hold into Friday, we pivot lower Monday, and of course today markets continue to sell off. So there certainly looks to be a little bit more fluidity in cable to the downside, as I said, back into this yellow region, which is base print 134. So it's about 100 points or so potentially still to go. But even as well, if you were to see the European markets, the interesting narrative there would be for the FTSE into Asia tonight, into London Open tomorrow, given that we've taken out the structured low, given that we've broken through value area in the session. Interesting to see if there's any sort of entry point around that 135. So if there's any sort of rejection tomorrow, maybe consolidation through Asia, a little bit of a box kind of consolidation, and then obviously look for manipulation tomorrow for that move lower, and that would be in the contingency based on data, contingency based on the dollar picking up steam, and maybe a little bit of upside progression into the US market tomorrow on the VIX index as well. So quite a bit there on that one. Gold, as I said, as the hedge, gold was pretty much stuck in this range last week. We got the breakdown, we got the move back into value area. So again, if I highlight the value area and just basically move to session, just focusing on last week's price action structure, it breaks down, it holds, it gets a move, it reacts from the value area, which is kind of basically 33.50, 33.60 range. We pivot lower yesterday into those prior lows, which was Sunday night's open into Monday, and we followed it through with further decline. So again, you'd expect gold probably to continue selling off, at which point where does it try to inflect into bottoms? Well, you've got V-shaped bottom at 32.70, you have the month-end July value area around 32.90, which is still around about what, $16 to $20 potentially for further downside on gold. So interesting to see if that happens. I don't trade gold myself. I don't think it's an asset that is clean to trade, but obviously different horses for courses and each to their own. So that's pretty much it in terms of the FX side. We've obviously talked about the dollar, the VIX, gold, the FX, and obviously these risk denominated assets. For me, really the last point to call is crypto. Now, of course, I've been a big advocate of crypto over the last 6 months. I've done quite well. But we obviously, it's not without its corrections, it's not without its pullbacks. We saw corrections in April after those big moves into the beginning of the year. We've had a little bit of a peak move over the last kind of 6 weeks or so, July into the mid part of August. And of course, probably the move in August was probably a little bit more surprising for some, because it like last week, for example, from those July lows, we went from 113 to 125, which was basically kind of a 10-11% move on the DXY, or sorry, on BTC, within what, a matter of a week and a half. The ideal scenario for me was obviously for BTC to create new highs and get a pullback to value area. And that value area for me was kind of 117s, because of course that was the CME. So I'm looking at this on the CME future. So this is basically gaps. It's kind of Monday to Friday. It doesn't take into consideration weekend volume. And of course, on the 10th or Friday the 8th in kind of Sunday the 10th, Monday the 11th, we had this massive spike on the upside future. So this was for me kind of after we make new all-time highs, and this is immediately where I would look for price action to come to. Now, of course, last week, a lot of negativity, of course, in the markets. Risk was definitely driven lower, which very evidently on Thursday. So incrementally, Wednesday night into Thursday morning, we're at 125. But by the close of Thursday, let's say Thursday night, we're back at 118. So there was basically a 6,000-7,000 up move followed by a 6,000-7,000 down move. And then, of course, on Friday, we incrementally just filled that CME gap. Now, from there, it's quite interesting, because if you were to look at Ethereum, this for me was the big one on Ethereum. This gap still hasn't filled on CME futures, and for me this was the one that I was watching, because the CME gap on ETH asset hadn't obviously filled, and I was really not convinced we'd see any sort of progression to the upside until a lot of these major alts and primary cryptos like BTC and ETH had those gaps filled. Now BTC obviously filled it first on Friday into the weekend, and of course continued to move lower, at which point it's actually taken out those structural bottoms from the end of July. But again, ETH on the other hand hasn't, but is very, very close to doing so. So really at this point it's a case of, well, the ETH futures bottoms are around about just a little under 4,100, but is still kind of some way above. So what we could actually see happen over the next few days is if it does, hopefully it does, break down, continue to fill this gap, complete that gap fill on the CME from the Friday the 8th of August, and actually try and find fair value somewhere down here between 38 and 4,000. I think that would be kind of realistic scenario for those of you who are looking to maybe buy in or accumulate, or even as a trading position. That's probably where I would look at longs. I certainly wouldn't look at it yet because you probably want to see a bit more on the downside. And for me, there is a lot of volume on the Ethereum play around that 38 to 39. So for me, it's breakdown and kind of unwind a little bit more of this volume, and then look for opportunities. So for me, that 3,800 is going to be quite interesting. And as I said, if you look at the BTC play, obviously market's very, very turbulent. Kind of a similar type of scenario. Of course, this was the prior moves. Breakdown, we break marginal highs. Of course, we gap. We then go into a period of consolidation. We pull back. We fill this gap. And then we move higher again, incrementally creating and filling this gap also. And that's what I would also look at here on the BTC play, is really down around that kind of 107, 108 play. And even when you look at it structure-wise, there was kind of that arching, aggressive move in May, which we obviously talked about, followed by that correctional movement in June, and then that secondary follow-through in July. But we also had, if you were to look at the BTC play on the other side, this was the CFD play. Now we'll obviously tidy this up and go to the daily print. This is kind of what we're looking at. So we've obviously got tops, breakdown, U or kind of a V into U-shaped bottom or W bottom with the extended second leg into this kind of flagging structure. We break out, we pivot higher, taking the liquidity, kind of as you'd expect. So now it's really not a case of looking at longs from 117. It's actually looking to see if there's a retest of this yellow area, because of course this was consolidation. We break out, but there was after we broke out of here, there was never a visible kind of clear pullback into this yellow area, right? And that's really kind of what I would look at. So from my perspective, let's see if there's a little bit more negativity in the crypto space. That would be ideal. Let's see if we can get to kind of 38, 39s. That would be ideal on ETH, while simultaneously on the BTC side of things, really do keep an eye on that kind of 108 into 109 side, because I would actually not be surprised if we saw a little bit more downside. Now, for all intents and purposes, we could actually hold that bottom at 112, which could very easily happen. But let's see what happens as things develop over the next few days. And even as well, when you dial in as well, you've kind of got that structure, secondary structure, massive, aggressive, imbalanced breakout. And really since then, it's just about holding above its head, above that 112 handle. So as I said, if there's more negativity this week, VIX continues to spike, dollar continues to impulse to the upside. If these plays are to happen, well then it wouldn't be remotely or one bit surprising to see that BTC play move lower back into this yellow breakout zone from what occurred at middle of July. And of course, that's just a massive accumulation zone for that next feature leg higher, in my opinion, which would then you'd then look at into over the next kind of month, 6, 8, 10, 12 weeks. All right. So obviously we've looked at it on both sides. We've looked at the future side of things, which I think is very good for volume. And then for those of you who look at more the CFD side of things, or physical tangible moves. Now again, USD terms only. It's not, we're not looking at it against other altcoins or anything like that. We're just looking at it against the stable coins and against the dollar. So interesting narrative to look out for. And then obviously on a broad basis, you can kind of see yourself, the running team, his risk has been down kind of 5 to 10% following kind of similar moves in the week or two prior. So that's kind of where we stand on that front as well. All right, so port of call tomorrow, really evaluate and see whether the risk sentiment continues to pick up and migrate lower. For me, the Dixon, DEXY and the VIX simultaneously will be two plays that I'll be watching closely. And then of course, if there is any sort of pullback, so let's say for example, DXY holds these highs and moves lower, or VIX holds the high and moves lower back into 15s, well then the only real kind of play to look out for then tomorrow is to see dead cat bounce recovery in the likes of the S&Ps and look for a potential reaction again from today's prior value area. So what we'd effectively see is when price action breaks down like it did here, got back up to value area, look to see if there's a rollover. So look to see if there's a rollover from said area. Now you can see bottoms are coming through into close, so let's keep an eye on that one. And again, same scenario in NASDAQ. It's very thin. Do I think it's going to go back up to value area 23.7s? No is the answer. But what it might do is, if you look a little left on the NAS, it might create a little bit of a dead cat bounce and formulate bottoms around the 23.5, 23.550 area, which is really last Tuesday's value area. So the week from last, this day last week. All right. So keep an eye on that one as well. And those kind of prior value areas are interesting because, of course, that's where accumulation of trading was visualized on specific set days as well. All right. So guys, I'm going to leave it there. Have a great week. I will be back tomorrow, and we'll be monitoring price action through the course of the week. So it's really just making sure that we're dialed in terms of sentiment. Fundamentally, that's important. Risk elevation, obviously, using the calendar and news events to kind of ascertain, making sure we're positioned on the right side. So whether it's short term or whether it's more intermediate style of length, I think that's really, really important. And then, of course, making sure, as I said, there is adequate risk factored into trading conditions as well. All right, guys, have a lovely week. Trade safe. Thank you.